Welcome to TradeTheNBI.com. This Jonas report is for the 6th of November. Well, we saw the nice continuation Friday, pushed back above 50% and kind of evened off right there, which gets us back towards the early October highs. Uh, Pretty strong from its reading, and you can see 53 from an NBI Magenta. So that's going to take several days to ease off. But of course, positive extreme, so the likelihood of coming back to the median of this previous positive extreme that dates all the way back to the early part of June, still going to be active. And it's just a question of now that we've moved to positive shakeout, uh, that conversion has to maintain that stuff above the positive line. As soon as it dips negative, that was where you'll see a significant move. You got cyan under red DOC, which is always a buy. And this is what we're talking about, though, this push of the steel going above negative 13 is effectively it coming from underneath, but as it fades back below, that'll create a little bit of softness, if you want to call it that, just fewer buyers. But of course, now you have the fund money coming in at a perfect time, right in the bullish move, though it would seem that now they have to pay quite a bit of a premium. So the question will be how much of it will go into equities versus treasuries. And the likelihood is, given the softness that we've seen from Fed stance as well as rates, uh, pretty good idea that the bulk of it's going to move into equities. You can see from an NQ standpoint, likewise readings from an NBI standpoint, and similar from DOC. So we're in a congruence now between the Nasdaq and the S&P. So that congruency, but the Nasdaq considerably more elevated than the S&P in relative terms from what we saw from the pullback in the Treasuries yield getting a little soft relative to where things are at, but that gets us right back into effectively pretty close to even where the Treasuries are, and we'll take a little bit of that pressure off, so to speak, at least drawing from the market as yields soften just a little bit. From an oil standpoint, maintaining down at the low area because there just isn't any additional conflict. So from the world stage, nothing has developed, so that's caused bit of fear to fade, and that certainly is the boon for equities as we see that happening. So that's taken a lot of strain off of things. That's given great strength to the euro, despite the fact the eurozone's in a negative growth. But still, this is what they needed to push back so that they can, and of course, that's going to want to draw itself right back up into this mid 107 range, which is almost there. So it's about reaching really a desired point for them to be safe from severe collapse. So that assumes that, of course, things stay neutral. And of course, with the situation in Ukraine and that being sort of benign, the only real question now becomes the Israeli conflict and whether that spreads or not. And for the most part, it's been fairly calm. From a gold standpoint, that means not a whole lot of incentive for people to run to the fear protection. So that's been muted. You see the same thing happening with Bitcoin. Just as that fear gauge started to fade, now they're just sort of in a protection mode, so to speak, because not everything's resolved. It's just paused, which is actually healthy for it because it gives it time to absorb. The interesting thing was ETH jumping out. So ETH trying to catch up to where Bitcoin had jumped through. And it's an interesting move to see that positivity there, sort of a divergence. And I think it's just about the lag that it had in finally catching up. And, you hear a lot more talk about digital currencies and things like that. So that's going to be probably more an impetus for people to jump into an ETH where you have some of the ones that might be more correlated to digital currencies and the effect they'll have. From a 50K standpoint, you can see we've been well above that 76%. So even a move back to the 76% would just be to even things out. Now, however, you do have to take into account positive extremes going all the way through back to that 4250 range. So that's a significant move when that does take place. But as long as we were reading this huge steel under the cyan, it's going to stay in that direction. Still hasn't crossed over, even though now you see cyan even from a 50K brief move above the red line, but back below. So within that, always a buy characteristic. from an intraday, it was pretty clean early on. We had the jump on the soft numbers, and then that just proceeded to move all the way through. Of course, does create the positive extreme back down to the 43.30 range. There was a little bit of softness towards the end of the day, but even here in post market, that's pretty much been cleared away as they checked for some stops. There wasn't a whole lot of activity there, and that's caused a little bit of a push up in the short term. So clean action, and with a lot more liquidity available for stocks, we could see potential of it to continue to run. I think that we'll see it first on 50K readings, and then if there's going to be any softness, and with the positive extremes that exist, it's just going to take a while for those readings to soften before there's any change. So for now, it becomes an opportunity where anytime there's a dip, you're probably going to see a lot of buyers coming in through that. So that's the long and the short of it for now. As always, though, you can look for me in the Skype chat. Trade well. We'll talk again later.